Welcome to Own the Chaos. The stock market is crazy and chaotic.
And crash. You son of a... God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby, to the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to Own the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made my mission to help you guys own it. I ran right through that. Sorry for the mumbling, but I ran right through that. I was trying to talk too fast. But guys, what's going on? It is Sunday, Stock Watch Sunday, April 10th. I'm super pumped for this week. Does anybody know why? I feel like you all should know why. Earnings season is upon us, ladies and gentlemen. The banks start earnings this week. The futures are up very slightly. We got S&P futures are up like 1.75 points. Lottie freaking da. Dow's up around 10, Nasdaq's up 27, and oil's down. Oil's down about 1%. Now still below the $100 mark. Probably not for long though. But guys, before we get into anything, I got top stocks that I want you guys that I certainly think are worth watching this week. Also, some Twitter Elon drama as well, which we're going to get into. Which I'm actually kind of surprised at the poll. If you guys haven't looked at the poll yet, please vote on the poll. Let's go. So as you all know, let's get on with the starting five. We got Shane Haley, Tiger's Edge, Pastor David Hopper, Allen 316, and Phil Show. You guys are our starting five. If you did not make the starting five, it's probably because you didn't hit that notification bell. I saw Cream say that I missed it. Maybe that's why, or maybe it's because you're not in the Chaos Crew as well. So the Chaos Crew notification probably gets thrown out quicker than the actual YouTube one as well. So if you guys aren't a part of that, make sure you're hitting the join button next to subscribe, or go to ownthechaos.com if you guys want to sign up for access to my watch list that I put out every single day of the week. I also have, you also get access to live streams and my portfolio, trade alerts, all that. So if you guys want to check that out, of course, hit the join button next to subscribe, help support the channel and everything you see behind you. And guys, let's get on to it. So I actually so this is interesting. I put in a poll 10 minutes ago or 4 minutes ago. There's 10 votes so far. So just keep throwing them in there. Delete the W in Twitter is what I said. And 70% so far say no, do not delete the W in Twitter. Maybe some of you guys don't get the joke. My sneaking suspicion is that Pastor David Hopper probably led the charge on no. Just because he's Pastor David Hopper. But yeah, I said delete the W in Twitter, meaning that if you do delete the W in Twitter, it would be called twatter. Titter, not twatter, titter. But I think you should replace the I with an A and call it twatter. That's just my thinking. I appreciate it, Pastor David Hopper. Listen, I appreciate owning up to it. But there's a reason why I said this. It's because Elon actually asked the question. Surprisingly, there's a lot of people that didn't get this either. Most people said yes, 57%. 42% said no. And it's very interesting because he was just kind of like trolling and just having fun, I think. Convert the San Francisco HQ to homeless shelter since no one's shows up anyway, which is pretty harsh. Of course. Everyone, and then he made a couple of other suggestions. Everyone who signs up for Twitter should get an authentication check mark. No ads. The power of corporation to dictate policies greatly enhanced of Twitter depends on advertising money to survive, which is interesting, but they also need ad revenue to survive. I don't think you're going to be able to get everybody to just hop on the Twitter subscription, which is pretty awful, by the way. It's costs like $3 a month, and it's not even worth that. A couple of other things that he brought up. Truth is the first casualty. I mean, he was on fire today, which or this weekend, which is hilarious because the Weather Channel, the most unbiased view from Republicans or Democrats, no matter what side of the aisle you sit on. And then he said, "Weather is fake. I've seen the Truman Show," which is pretty funny. But then came into which I thought was interesting, and this is maybe one big reason why this could be something that we could look at as a bullish sentiment. And I know this seems kind of weird because it sounds pretty bad, right? Elon brought up a very interesting point. Most of these top accounts, quote unquote, rarely tweet and post very little content. Is Twitter dying? You have some of the top ones here. You have the Ellen Show, whoever this is. And then Lady Gaga, Elon obviously comes in at number 8 with 81 million. Taylor Swift, Cristiano, Rihanna, Katy Perry. You recognize all of these names. Then he comes in and says Taylor Swift hasn't posted anything in 3 months yet, has all these followers. Justin Bieber only posted once this entire year. It's very interesting because nobody's participating in Twitter, at least on a larger scale, right? With the more popular platforms such as TikTok, such as Instagram, Snap. And we just saw that TikTok actually overtook Snap as the number one used app in amongst young adults from 18 to 24, which makes a lot of sense. I don't think that anybody would be surprised by that. But I think this is actually interesting. I don't think that Elon's actually doing this to harm Twitter, and we'll see how the stock actually reacts tomorrow. I think he's doing it to kind of like bring awareness to not just because the focus for Twitter when Elon came up and created all the drama with buying up shares of Twitter, buying up 9% of Twitter, was the freedom of speech part. But I think the point that he's trying to convey here is that there's also other fundamental issues with Twitter that need to be addressed, which, to be honest with you, I'm actually looking forward to. It's not just the freedom of speech or the censorship issue that we've seen in social media, right? It's also the fact that Twitter is such a powerful platform, and yet the most influential people on the platform don't even use it. And Elon's probably out of that top 10. I would imagine that Elon Musk, let me look at the top 10 again. I would imagine we got Obama, which is number 1, which is interesting. Justin Bieber, Katy Perry, Rihanna, Cristiano, Taylor Swift, Lady Gaga, Elon Musk, Dramati, The Ellen Show. I would imagine that Elon's probably the most active out of all of them. Has 81 million followers. So I think that the points that he was trying to address was that, like, there's a lot of opportunity to make Twitter a lot of money. And while he might have done it in his own typical Elon fashion, I think this actually bodes well for the company. And I don't know if it actually has a great reaction tomorrow, but there's definitely going to be, I think, some good things that are brought up out of this because of the level of awareness that's being conveyed on the fact that, yeah, there isn't this great amount of influence on Twitter, especially from the largest accounts that are on here. And maybe they did at one point. I'd have to go back and look at some of the larger accounts, the Taylor Swifts, the Justin Biebers. But like, if Justin Bieber and Taylor Swift left the platform, Twitter's won't be harmed. There's not going to be all these active users that leave Twitter because Bieber leaves and Taylor Swift leaves and Obama leaves the platform. You know what I'm saying? Like, that's not gonna really matter a whole lot to Twitter or its users. So I think it's interesting to just kind of see who actually uses it, because I personally use it for the most part. Obviously, I use it as a creator. I need to be able to get my voice out there to you guys. Many of you probably came here because you saw me on Twitter. Go follow me at Own the Chaos, by the way. But I think that it's the best platform to go find news, right? If something happens that's newsworthy, I'm not going anywhere else other than Twitter to go find it. It's the fastest way to get it. And you see me do it all the time just when I'm looking up earnings numbers, right? The earnings numbers flash out on Twitter and the breakdowns and everything else. That's the fastest way to get the news on my favorite stocks when earnings are released. So, of course, I could get Bloomberg and I could, go through all of that. But the breakdown and the way that there's so many people that can kind of decipher each part of the earnings report. I can see those specific details. Like, that's what's great about Twitter, is that being able to obtain information and get it quick. You want to find out something that's going on with the Russia-Ukraine issue. You can find it very fast. Now, obviously, there's also this risk where you are potentially being delivered misinformation, or there's propaganda that a lot of people worry about. But that there's benefits, there's pros and cons to it, right? Obviously, those are some of the cons, but I think the pros certainly outweigh the benefits in this case. But and Elon's there to kind of solve a lot of that too. So I think that this is actually just him bringing up some awareness on Twitter. I own Twitter now. I've never owned Twitter up until Elon got involved with it. So I think it will pan out. I'm pretty confident in that. We have earnings on Twitter coming up at the end of the month, so that'll be interesting to watch, of course. But I think this is going to be an interesting story as it continues to develop. Elon's definitely starting to become that active investor, that oh my gosh, the activist investor. Sorry, like your Carl Icahns, for example, Bill Ackman. Those are activist investors. They invest in the company so they have controlling interests, so that they can make a difference in the company. Like, if it's a company that has a great vision, or if it has a great growth potential, but maybe something's not right, the management's not right, or what have you, those types of investors go in and actually get them to do things they want them to do. That's either good or bad, right? But I think in the case with Elon, it may actually end up being good. We'll have to see. Elon has no experience in creating social media platforms, but if everything that guy touches does amazingly well. So I'm pumped for it, and I'd love to hear you guys' thoughts. Let me know what you guys think in the comments below. Let me see. Johnny Gonzalez wants Twatter. Yeah, maybe Twatter's the better call. 52% of you guys said no to removing the W in Twitter. I'm kind of sad about that. I would love to see Titter. Yeah, I wasn't trying to turn this into a Trump conversation, so you all can just cool that off. But he's not coming back. I hate to break it to you. Best platform for stock news, even if some are fake. Yeah, I mean, they're few and far between, I think. But yeah. Okay, so we have earnings this week, which I'm super pumped for. And as we always know, earnings always start off with the banks. In particular, we have the big major banks and some regional ones in here, which is usually not the case. I would say there's only one regional bank that I think actually is worth noting, which is PNC. A couple other ones. We have Morgan Stanley, Goldman Sachs, Ally, and a couple other ones. So we're just starting. JP Morgan is on Wednesday pre-market. We're just getting into this. This is going to set the tone for the rest of the earnings season, whether it's good or bad. And I think that it'll be interesting, because when we look at the banks and how they're going to be reporting, the banks are very influential on the entire market. If the banks aren't doing well, it's usually because they're not, issuing out loans. There's a lack of interest or lack of demand for loans, that sort of thing. I think that if we start to see that wane a bit, then that could impact how some of the other stocks move. So later on in the show, I'm going to tell you that there's a couple of stocks that aren't going to be reporting this week that I think are still worth watching. And I think that I'm going to create a video later this week on stocks that I think are going to be worth watching throughout the entire earnings season. So, we have about 6 weeks of earnings to get through starting this week, and it's going to take us all the way to mid to late May. And I'm super pumped for it, because I'm going to be able to react with you guys every step of the way when I go live again at 3:45 p.m. Eastern time, Monday through Thursday. I'm live with you guys. I'm reacting to these earnings. So if you guys are new to the channel, you're just watching this for the first time, hit that thumbs up first of all, and then hit the subscribe button, hit that notification bell so you don't miss an earnings reaction. So I'm going to be creating that video, so make sure that you guys are keeping an eye on that. I think I'm going to create like 5 or 10 stocks that I think are worth watching throughout this entire earnings season, because there's so much to talk about, right? Some of the narratives are going to be on inflation, this recession talk, the Fed. A lot of this is going to continue to be that theme as we head in here. And I think there's going to be some mixed sentiment. We got Restoration Hardware that reported a couple weeks ago, and their CEO came out and was very doom and gloom, right? But then there was a lot of other ones. Levi's came out last week and reported their earnings and said that demand is strong as ever, and they see no recession at all. So I think there's going to be an opportunity to pick your spots, right? Like, I think that there's going to be certain stocks that do really well despite the environment that we're in. And I think there's also going to be stocks that may be a bit treacherous because of where we're at. And, I think that the theme, again, is going to be stocks you're going to want to own, or stocks that make money. But I don't think that staying away from tech or growth stocks is the answer either. There's a lot of narratives being spun out there that value is going to be the only one to hold, and that to just stay away from growth, which is why we've seen Apple and Microsoft, some of the FANGs, also pull back last week. And I think that that's going to be a big mistake. I think that's a big opportunity. So I think growth is still there, but I think the growth has to be quality growth. Qualcomm, Cisco, those types of growth stocks, or Cisco's not really growth, but Qualcomm's certainly a growth stock. I mean, those types of stocks that are continuing to grow, that have great balance sheets, that make money, are going to be the ones to hang on to. I mean, obviously your Apples, that sort of thing, but I got some other good ones that I think are going to be worth checking out. So make sure that you stay tuned and hit that notification bell to get notified when that video comes out. But let's get into the top 5 stocks that I have watch this week. So my first one, guys, is going to be Delta Airlines. Delta reports earnings, and they report on Tuesday, I believe, Wednesday morning. So Wednesday morning, they'll be reporting. Let's take a look at the chart. Oh, that's not the chart. There's the Delta chart. So Delta Airlines reports earnings on Wednesday morning, and this will obviously set the tone. There's been a lot of drama going on between the airlines in general, as JetBlue has put in a bid to acquire Spirit Airlines, and that's obviously created some tension here. It'll be interesting to see if that actually goes through, right? Like if the merger goes through. There's a lot of talk about them consolidating too much, and that there's going to be just monopolies. They start having those types of conversations. So looking at Delta, their expected earnings per share is at a loss of $1.32. The average estimated revenue is $8.78 billion. That's the estimated revenue for the last quarter. And so that'll be interesting. I think that they crushed the revenue number, by the way. Earnings, I'm not so sure. That's going to be the interesting part about this entire conversation, this entire narrative that gets spun on the airlines, right? Because we're potentially going to see record numbers as far as travel is concerned. And you guys have heard me say that if you've been on this channel for the last, for the last however long, but like if you've been here for 5 minutes, you probably would know that I'm very bullish on travel in the summertime. And I think that we do see record numbers. So if we're looking at Delta, it's an interesting dynamic. You have the issue of inflation. You have inflated fuel prices and costs. So, and we know that the airlines bleed money like crazy. You also have employees to pay. There's this huge fight, obviously, with wages going up as well. So can Delta overcome that? And that's going to be the interesting part. I'm not so sure. While I do think that they see revenue numbers go through the roof, and I think that they start talking about how air travel and traffic is going to be significant in the coming quarter or 2 quarters, I think that Delta could be in some trouble here because of that. You can see obviously on the chart that it's been downtrending, and it's been following the 200-day moving average down every time it comes up to test a 200-day. Really over the last, I would say since November, it really hasn't sustainably held above that 200-day moving average. We've seen little peaks above it here and there, but it's never really lasted. And so that's also troublesome here on the chart. What I will say though is that risk reward is probably not too shabby. You have RSI sitting around 45. So it's kind of at a support here. I would say that the stronger support's more around 35. It's at 36.74 is where it closed out on Friday. So, would I be in Delta right now? I think that there's risk involved here, but I think that the risk reward would be huge if Delta came in and beat on earnings and gave a really upbeat outlook on, yes, while costs are high, we're overcoming it, and consumer demand is still ridiculous. So if they spin the narrative that way and investors buy into that, I think Delta is actually going to be a good buy. Okay. So that's Delta Airlines. Interesting one that's coming up next is Bed Bath & Beyond. Bed Bath & Beyond reports earnings on Wednesday pre-market. I'll pull that chart up. And they obviously have been all over the place. This is one that was on Wall Street Bets for a time and has had some really interesting moves. The stock's been talked about as far as, potentially not being one to own because of how much money that they're losing. They haven't really hopped on board as far as digital sales are concerned. They did kind of well during the pandemic, but not as well as they should have. And that's been a big, tough part for them. But let me read you something that I think that is very interesting. The company blames supply chain challenges and inflation, factors that probably worsened the fiscal fourth quarter from last year. But if they come in and say something along the lines of like what Levi's did, I think that Bed Bath & Beyond has the potential to make major moves. And we've seen this out of the company before. So if they come in and say, hey, listen, we did have some issues with supply chain and inflation problems, but we've been able to resolve those. And demand is so great that we've been able to pass a lot of these costs on to the customer. We haven't crushed demand. Bed Bath & Beyond could have the potential to do really well. We have price to sales right in line. Like it's just barely, it's 0.25 times sales. Really not that big of a deal. They're still struggling here as far as being able to turn a profit, but this could be one that I think probably actually does relatively well. So their expected earnings per share are, bear with me 1 second. I just lost my spot. Expected earnings per share is 4 cents. They come in profitable here. I think it's going to do really well for the stock. I think it's worth a shot. Like if you're trying to just make a quick trade on this, it's probably worth it. Just to take a quick trade and have a tight stop, right? Falls below 1762. That's a pretty decent support to where if it broke below that, I think you're in trouble. There's also the 50-day moving average that isn't that far above that. So that's certainly an area to keep an eye on. It's held above it here virtually since late February. So keep an eye on this one. I think that's the risk reward looks good. You have RSI sitting in the low 40s. You want to take a shot at this one? I ain't mad at you for it. Is it a good investment? I would probably stay away from that. But I think for a good trade, there's definitely some good potential here as far as Bed Bath & Beyond is concerned. All right, next one's going to be PNC. And this is the first bank. This is the only bank that I have on here this week where they report earnings on Thursday. Yeah, Thursday morning they report earnings. And usually, you guys know me. Usually I'm going with Bank of America, Goldman Sachs, JP Morgan, the big banks. Those are the ones that I think are worth owning. And I still stand by that. Bank of America, I think, is my favorite bank that I say it's worth owning for the long term. It's worth owning this year. It's worth owning next year. It's worth owning the next 20. The balance sheet's incredible. The growth is here. Obviously, they benefit from rising interest rates. But PNC is going to be interesting. We have mortgage rates that are going up over 5% now, and houses are still being bought. We are seeing some demand slow down a little bit here and there. But the fact of the matter is that millennials are still out there buying homes, regardless. So interest rates on mortgages are going up considerably. PNC benefits from this as well. So I think that there's a good opportunity to take advantage of here as far as PNC is concerned. They've also raised their dividend to $1.50. So they raised it 20% compared to what they normally do. So this will be an interesting one to watch as well as far as the dividend's concerned. If you guys are interested in dividend stocks, this is a great one. Your RSI, like I said, the risk reward here seems pretty low. Came down to 177 lows and has bounced pretty nicely from there. We saw a low pretty close to that back in the beginning of March. And I think that may be as low as we see PNC go, unless for some reason they come out with terrible earnings. Their earnings is $2.87 per share is the expectation. $4.82 billion in revenue for the quarter. I think they smashed both of those numbers, honestly, with interest rates going up. And remember, with the Fed raising rates too, that's instant money in their pocket for banks like Bank of America and so on and so forth. And they don't have to lift a finger because of interest rates going up. So I think that this is actually a good opportunity here. It's well off the 50 and 200-day moving averages. You got a resistance up here at around 197. So those are going to be key areas to watch, but I think PNC could be a good one as well. This is going to be the next one here is very interesting to me, and that's Rite Aid. So Deutsche Bank came out and downgraded Rite Aid and said that they are in danger of going bankrupt. The stock, I can't believe the stock's this low now. $7.51 is where it closed at. $7.51 is where it closed at. This is very interesting too. You have market caps at 418 million. Price of sales is basically at even. And forward PE, yeah, they're losing money. That's the bad part. The good part is that the downgrade, I think, was an overreaction for starters. I truly believe that. Let me give you the numbers, the expectations here and their earnings are expected on Thursday morning as well. So keep an eye on that. But Rite Aid's expected earnings per share is a loss of 56 cents. Revenue comes in at $5.2 billion. And so that'll be the numbers to watch there. But there's some interesting stuff going on. I think so George Hill from Deutsche Bank downgraded Rite Aid to $1. And it says that we see a likely risk that the company provides guidance next week that causes investors to question the company's ability to sustain itself as a going concern, leading to a sharp reduction in the value of Rite Aid shares. So then he downgrades it to $1. Now, Rite Aid has a lot of debt, $3.2 billion, which is a lot, especially compared to their market cap. $3.2 billion. The market cap's at 430, as I had mentioned before. But I just think that it's so cheap at this point that you almost kind of have to take a chance on it, right? I mean, this is going to be one to watch for, because if they come in and talk about an outlook that allows them to actually improve the debt reduction, that will be something to probably keep an eye on. You have, let's see here, Rite Aid needs to generate 400 to 450 million in annual adjusted EBITDA to continue as an operating company. At a number below 400, the equity arguably has no value, as the company is not in a position to generate real returns to shareholders. Unfortunately, we believe COVID has hastened the decline in retail pharmacy segment. Again, this is from Deutsche Bank. And we see the potential for a dramatic negative inflection point for Rite Aid shares, as this preliminary fiscal 2023 outlook seems unattainable. So there's a couple things here. Could Rite Aid be potentially, now they obviously have a lot of debt, right? That's something that an acquiring company would have to take on. So that certainly poses a risk for anybody looking to buy them up. But so could they be an acquisition target? I don't know. I think it, to me, based on how much Rite Aid is expanded, I think that it probably makes sense for a CVS to come in here and scoop them up, if that actually comes down to it. I don't see Walgreens doing something like that. I don't see any of the other major ones, but CVS could be the only one that I actually see coming in here, scooping up Rite Aid. Maybe a Good RX as like a one that's way out in left field. Could Good RX come in? A digital prescription platform actually come in and scoop up something like Rite Aid and have physical stores? Maybe. That's a really big stretch, but it's certainly an idea. I would say that Rite Aid, the risk reward here is actually much better than what it was 6 months ago, only because it's come down so much. And I think the overreaction here is a little crazy. Came down 30% on that downgrade to $1 per share. So, and here's the other thing too. What happens if they do get acquired? Where's the stock go from here? It goes up. That's for sure. So the risk reward, I think, is certainly good. You got RSI pretty much in oversold territory. I believe that's an understatement. You have $7.50 support. It closed at that on Friday. So if you want to, as far as risk is concerned, there's a lot of risk still involved in here. But if you want to take a little flyer, I think Rite Aid is definitely one to watch for. Watch this be the best one, best performing earnings call of the week. Wouldn't that be something? Just because of how much it's down. And then finally, we have CarMax, KMX. This is also going to probably set the tone for the rest of the earnings season for the autos in particular. I think that this is going to be one to watch because of how car sales have gone and the cost of car sales. So, a couple risks here with CarMax is that the company tends to keep its gross profits per vehicle steady between 2,200 and 2,400 through a wide range of selling environments, in part so that it can boost market share in its fragmented industry. That's from the Motley Fool. Further, there's a couple of things that are worth watching here. Follow the inventory for evidence of the company having no trouble filling. It's lots of despite tight supplies in the auto industry, as we know. These used car platforms, go try to find and rent a vehicle right now. I tried to rent a vehicle in Charlotte. I can't do it because there's no cars available. That's the big problem with CarMax as well, is that there's no cars to find to actually sell. And when they do sell them, the profit margins aren't that great. As I mentioned, $2,200 to $2,400 per vehicle. The other thing that you want to look for as far as CarMax is concerned, look for executives to update their fiscal year outlook, which currently calls for solid sales and earnings growth along with significant market share gains. Can they pass the cost of these vehicles that they're getting at auction or trade-ins? Can they pass the higher prices on to the customer? I think at this point, because of supply chain issues, we haven't been able to really see the new car market take off and really start to do well, unless you're Tesla. And so I think that this is something to certainly keep an eye on. If they come in and say, hey, guess what? We're still selling cars like crazy. Awesome. Let's watch this move up above the 50-day moving average at around $104 a share. It's sitting in the middle of the RSI at around 51. I think that it's got a pretty solid support around 98. So the risk reward here, if I would be shocked if this actually came down below 95 on a reaction to earnings, unless it was really, really bad. And I don't expect it to be really, really bad. I think that there's going to be maybe some things that might not excite too many people. And the lowest I could see it coming down is maybe around to revisit the previous lows around 95. I think it would be crazy to think that it goes below that. But we've seen these types of movies before. If they come in and shit the bed, it's going to be ugly. But I think that the risk reward here is actually pretty good for CarMax. Their expected earnings per share, it's $1.27. Revenue is expected to come in at $754. So those are all going to be areas to watch, or spots to watch, numbers to watch for CarMax. And guys, that is your top 5 stocks to watch this week. It's not too exciting ever, really, when you start to see earnings come out in the first week after earnings officially gets kicked off. But it'll start to get more exciting the following week. So this is always great because this kind of sets the tone. So if these companies come in and start reporting really good earnings, especially something like a CarMax, we got Wells Fargo, like I said, Goldman Sachs, JP Morgan, they could set the tone. Another one to watch as well in healthcare is United Health Group. It's UNH. That was one that I was a big fan of in the beginning of the year. If you guys recall, no big deal. Not trying to pat myself on the back here. I didn't trade it very well, but it did hit all-time highs. I said that United Healthcare, and this was in the watch list. This was in the Chaos Crew watch list, which if you guys are not a part of, hit that join button next to subscribe. I had the United Healthcare play in here since December. Since December, I had United Healthcare in here as a play on the overall market, and it has been absolutely ripping. This is one of the great defensive plays. If you guys are worried about recession or what have you, you fall into the consumer staples, utilities, and healthcare. United Healthcare has been absolutely insane. So I like this one as well. Just didn't make the top 5 because I didn't think it was as interesting as some of the other ones. But nevertheless, that's going to be one to watch for too. So these are all going to set the tone this week, guys. Let me know what you think in the comments, and I'll go ahead and see what you all are talking about, what you guys are thinking. Okay. People get in their feelings about President Trump. It's like, Jesus. I really don't have any skin in the game. Like, I mean, he's not coming back to Twitter. I'll be shocked if Trump comes back to Twitter. Any solution for level 2 and for Friday mornings? We'll get to that. So I'll answer that question later, Phil. I have not since I talked to you a couple hours ago. Eric Atwood, I guess SoFi would now be considered a regional bank. It's more of a fintech company right now, I think that that's the category that SoFi actually falls into. So not really regional, even though they do have the banking charter, that hasn't been approved yet, has it? What stage are we in? So it's been approved, but I don't think they actually have the charter just yet. So that's going to be interesting to watch. I think it's still more or less a fintech company than it is a regional bank. That's for sure. Okay. Okay. I think, all right. So let's see here. I'd buy Delta. Alan says I'd buy Delta if it comes back to $30. I'd be surprised if it came down that far. Darren Anderson bought some PNC last week. We'll hold it through earnings and beyond. Yeah, I think it's just at good levels. I think you'll like that one. Rite Aid's like a Woolworths. God, I don't even know if I've seen a Wool. Like, are they still around? I guess they're not. Walgreens is a better pick. I think I like, out of all of them, I think I'm still going CVS, but that's just me. But he says they'll be using drones for delivery very soon. That'll catapult them at a much higher price. Maybe. That's going to take a long time. And what's the cost associated with that? I would be curious to know. What about Albertsons earnings on Tuesday? You know, I always get these crazy one-offs. I don't even see Alberts. I do see Albertsons. You know what? I got to be completely honest with you. I have no idea what Albertsons does. Maybe I should. Consumer non-cyclicals, food and drug retailing, food retail and distribution. Is this like a Conagra? Food and drug retailer in the United States. Company stores offer grocery products, general merchandise, health and beauty care products. So is it kind of like I don't know what that is. It's not a Conagra. It's like a grocery store, right? ACI Albertsons. Never heard of it. Well, I'm looking at the chart. I guess what would be the comparable thing to this? Kroger? They're like a Kroger. Okay. That just shows you. There must be a part of the country that I've never been. An Albertsons. But Kroger, they just reported earnings not that long ago. That stock's moving up pretty decently. We go back and look at Albertsons. And ticker symbol's ACI. Had a nice little bull flag pattern here, but then broke out of that on a gap down. I don't know much about the company, to be honest with you. I think the grocery store industry is going to be just fine. And I think that it probably ends up continuing to move up as a result of what we're seeing, especially as people need to continue to get groceries. The costs are going to get passed on to consumers. So I think it's actually a really good inflation proof type of story, which is why we're seeing Kroger's also do well too. And, you know, Walmart hit all-time highs last week. You got Costco that also hit all-time highs last week. I think that there's definitely a case to be made for something like an ACI if I'm just talking about the general industry, but I have to dive a little bit further into the company itself. The chart looks a little bit weird, so I don't know. I don't know about that. I can tell you what the expectation is. So the expected earnings per share on Albertsons is 64 cents per share, 64 cents per share, 16 billion. Good Lord. 16 billion in revenue is the expectation there for Albertsons. So, I remember when they were Skags. Skags, that kind of sounds familiar. Mr. DeSoto says, I remember where they were Skags Albertsons. What part of the country? Grocery in Florida. I mean, I've been in Florida. The only one that I really know of in Florida that's like southern, you know, that area, regional grocery stores is Publix. Okay. How do I feel about Yeti? Asks Taylor. Keep asking the questions, guys. We've got a little bit longer to go here. How do you feel about Yeti? Nice pullback. Could see them being the biggest outdoors brand in the next 5 to 10 years. Reminds me of a Nike for outdoors, asks Taylor Johnson. Yeah, so I think let's take a look at Yeti. I love Yeti as the brand. There was always this like cause for concern because there's plenty of other brands out there that have quality products like Yeti. But Yeti's has figured out how to actually market this in a really good way. I would say that it's come down to a point to where I think it probably seems reasonable. It's at 19 times next year's earnings, so it's not expensive in this space. It's hit the bottom here at 54.15. This could be a potential bottom. It's an interesting inflection point, Taylor. Here's what I'll say about Yeti. I love the company, and I think that they're going to be fine longer term. If you're looking at 5 to 10 years, then yes, I think that they will be just fine. In the short term, though, it's going to be painful if it doesn't hold this $54 bottom. If it breaks below this, it's probably going to go lower, and I think it's going to go a lot lower. Just given the technicals here, I think it could come down to 48 potentially. That's the next bottom that I'm actually seeing, and then again, we're also seeing a low at 44. But to this point, you can kind of see this curling a little bit. This may be the bottom for Yeti. Could very well be. This actually looks pretty attractive here. I will say this. I think that travel is still going to do really well, not just air travel and all of that, right? I think air travel as well as just like car travel, car trips, road trips, that sort of thing, still going to be there. Camping still going to be a thing. So yeah, I think that Yeti is very well poised for that, for sure. Oklahoma City is where Albertsons is. Okay. CVS is much better. Oh yeah, we're still having the CVS conversation. Screw colleges. CVS is much better. Yes. Yeah, their balance sheet is incredible. Okay. Darren asks to look at SBLK. Looks like they're forming a bull flag pattern on the 4-hour chart. SBLK. Let's take a look at that. SBLK. No, I wouldn't say it's a bull flag pattern, but it is an interesting little development here. Let's take a look at the chart. So Starbulk Carriers, let's see what they do. Starbulk Carriers, you guys are bringing out some real interesting ones here. Greece-based shipping company operates a fleet of dry bulk carrier vessels, so it's in the shipping business. Mike, I would venture to say that this probably has some sort of dilution or some massive amount of debt that it probably has to deal with, but maybe not. I have to look in the filings somewhat. But looking at this, I would say that it's got a stingy resistance here at $30. It's sitting at 28.30. From a technical standpoint, it actually doesn't look too bad. It bounced off the 50-day moving average and held up above it pretty strongly. So I would say that, yeah, this actually looks like a pretty decent spot, just if I'm looking at the chart and I didn't look at the name and I had no idea what was going on with the company. So, but definitely not a bull flag pattern. I mean, even if we go to the 4-hour, which we can do. Nah, not seeing that either. What's a good example of one that I just saw not too long ago that I can give you? Oh, shoot. It'll come to me. But yeah, that's not a bull flag pattern. I should have those like on demand. Like I should just have them like I should push a button. Here's your cup and handle. Here's your bull flag. I need to get on that. All right. Well, that's going to do it for me. Guys, thanks so much for tuning in. I'm going to be back here tomorrow at 3:45 p.m. Eastern time to go over whatever's happening in the market. I don't think we have any earnings that are worth talking about tomorrow. We got Sigma, Lithium, and Airspan tomorrow afternoon, and then CarMax. So it's a light week for earnings, even though it's the start of earnings week. But we have Good Friday. For those of you who celebrate Easter, Good Friday's on Friday, and there's a half a day on Friday. So that's probably why it's a little bit of a lighter week for earnings. But the banks are a big deal, guys. It's going to be important to keep an eye on those, and we'll continue to react to those as things develop throughout the week. So, guys, thanks so much for tuning in. Make sure you hit that subscribe button, the notification bell, and hit that thumbs up on your way out the door. And if you haven't joined the Chaos Crew yet, I would certainly encourage you guys to do so. Hit the join button next to subscribe or go to ownthechaos.com. Would love to have you guys there as a part of the Chaos Crew. You get your watch list every morning. I put out 5 stocks to watch with a fundamental and technical breakdown of each one of those before the market opens to give you an idea of what to watch for. So if you guys want that, as well as access to our Discord group, trade alerts, my portfolio, and private live streams, again, hit the join button next to subscribe, and you can walk your way through there. Would love to have you guys as a part of the crew. Thanks so much for tuning in. As always, I'll see you all before the bell. And B. Smith is out. See you guys. I just wanted to do that. It's been forever since I've done that. The OGs know. See you guys.